going to address some of the issues of the tax bill, and I'm going to start with the no tax on tips and give you an explanation of how that applies. And excuse me. So what we have is no tax on tips. This is a temporary provision. It covers the years 25 through 2028 and then expires. And basically what it's designed to do is allow employees who receive tip income to exclude the first $25,000 annually of qualified tip income. This means you don't have to be an itemizer to claim the deduction. It's an above-the-line deduction, and it will reduce your taxable income. Basically, the game plan is the president on his stump when he was running promised no tips on income, started in Las Vegas, and it basically carried through, has been passed by Congress. And you have to be an eligible employee, and basically it covers qualified tips. And it basically, the IRS has issued a list of qualified people, beverage services, bartenders, waitstaff, food servers. In entertainment includes gambling dealers, musicians, ushers. In the hospitality section, it's baggage porters, bellhops, concierge, home maintenance repair workers, landscapers, personal care aides, skincare specialists, massage therapists, barbers, hairstylists, recreation instructors, and in transportation, it's parking attendants, taxi, and they put in a special provision for lawyers, so now you can now tip lawyers. That was a joke.
You want to put out a legal law? Maybe we'll get a ruling on that.
No, what we're going to do is we're going to put on our bills, preparation of will $1, suggested tip $2,500.
All cash?
What do you mean all cash? We don't take credit cards. Anyway, okay, so this basically is designed to help employees. There's a phase out. The IRS issued 70 classifications of people who qualify. Now you've got to understand that these tips do not reduce Social Security, Medicare income. It's still subject to that, and it's still subject to any federal and state withholding requirements. So this is only a federal provision. So any tipped income that may be excluded for federal purposes does not apply for New Jersey, New York, and the other states. There's an income phase out. The income phases out for a single person at $150,000, and it phases out for a married couple at $300,000. The employers are supposed to track tip income. There's a special form 4137 to qualify cash tips that the IRS requires employers to file. And then on November 25th, the IRS issued a waiver for the tip income and the overtime income reporting. Since all of the regulations and the forms have not been issued yet, that there will be no penalties on employers who fail to provide the proper reporting to the IRS. But again, for employers, record keeping is critical. They have to maintain records of cash and non-cash tips. It also applies to restaurant people who are in the back, such as cooks, line chefs, things like that. That all has to be tracked by individuals. And then again, this is transitional relief. It's only for the period 25 through 28. And then again, going forward, on the 2026 form W-2, there's going to be a new box 14 where the employer has to fill out the appropriate codes to justify the exclusion of the tip income. And then, for example, a hair salon owner would need to report this as hairdressers, hairstylists, and cosmetologists on Form W-2 to qualify. Again, just as a quick summary, this no tax on tips provision provides temporary federal income tax breaks for eligible employees. Employers primarily need to focus on updating payroll systems for future reporting mandates while maintaining current FICA and income tax withholding obligations. All right, and then I'm going to jump onto the no tax on overtime, which is also came in the bill. Again, this is also a temporary provision. It covers calendar years 25 through 28. And it allows employees an above the line deduction for the premium portion of overtime. It's capped at $12,500 for single filers, $25,000 for married filers. The one thing that's got to be explained is this only covers overtime paid under the Fair Labor Standards Act, which is 40 hours overtime and pay overtime time and a half. This does not include holiday pay. If you have employers that pay double time for working on holidays or shift differentials, that does not apply. It does not apply to labor union agreements that have bonus shift pays. It's strictly the federal labor standards, 1.5 times, and only the overtime portion qualifies. As an example, if an individual is a single filer, earns $10,000 of qualified, and again I stress qualified overtime, premium paid in 2025, the entire amount is within the limits, and the employee would exclude the $10,000 of income from his or her gross income. If they're at a 22% tax bracket, that could be a $2,200 tax savings to the individual. This is one way that they're looking to encourage people to work overtime, as it will not cause a drastic increase in their taxes. Basically, there will be no federal income tax on the overtime, but again, it still applies for Medicare taxes, state income taxes, state disability, unemployment. All of those are still subject to the rules of regular income taxation. The employer is required to track and report separately all income that's classified as qualified overtime. There's going to be a separate box on the Form W-2 to indicate how much is overtime and how much is regular pay. And again, the rules apply only to Fair Labor Standards Act overtime, not holiday bonus pay, union pay required for overtime rules. Basically, the places a heavy burden on employers. They now have to update their payroll systems. They have to do granular reporting. So if you have somebody who's in multiple classifications, you could have qualified overtime and non-qualified overtime. If you work, let's say you're in a position where you get holiday pay at double time, only the time and a half counts. So basically, the employer has to break that overtime between qualified overtime, which is the straight 1.5 times over the 40 hours, versus any other premium overtime that has to be reported. Again, the IRS in November just issued guidance that there will be no penalties imposed for the 25-year for failure to or miscalculations and classifications of overtime and tips. But again, it's in the employer's best interest to report that so the employees can take advantage of the benefits of these new provisions of the law. Again, it's up to the employer to track and report to the employee so the employee can report on his or her tax returns as an above-the-line deduction the amount that was probably excluded overtime. At this point, I'm going to turn the program.
Marty, a question on that. How do you think the state will handle this?
There's nothing in New Jersey that says they're going to follow that. I have not seen any state put out anything that indicates that they will follow the federal exclusion.
Thank you.